first top concern was the health and safety of our staff. And we spent the first few days, first few weeks, just making sure that those who were traveling were safe, had found passage home, and that all those who needed to be able to get home safely. The second concern would have been the health and safety of our portfolio. Trying to think through which companies were highly levered, which might be most exposed to the industries where a stoppage of travel or people being able to enter the premises would have the most impact. And then finally, we started to think about the long-term consequences for the portfolio. The markets were very volatile during those first few days and weeks after the COVID-19 pandemic broke. We started asking questions around, firstly, the things in our portfolio that seem to be selling off mostly as a result of market liquidity, and asking whether market liquidity would remain as bad. Some of the credit that were actually good credits were selling off in a hurry, and we were concerned about whether in the long term they would still maintain the value that we think that they had. Fortunately, liquidity did come back very quickly as soon as the central banks started helping out in the markets, and so we were able to hold through, and indeed some of the value did come back. However, we also started thinking about what were some of the types of behavior that a pandemic that was truly worldwide and for which there were no known treatments, let alone known vaccines to prevent infection. What would that do to long-term behavior? Even in past pandemics, we saw that travel to the affected countries would not recover for 3 to 4 years. So we started worrying about our exposures to hotels, to airlines, and to the travel industry, and asked ourselves, are these companies that had a capital structure that could allow them to survive through the pandemic, whether there was a need to protect them, raise some additional capital for them, or were things which we needed to sell? So we certainly spent a fair amount of time thinking through those things in the portfolio. Then we started thinking about some of the responses that central banks and governments would need to have in order to fight the pandemic, and what are possible winners as a result of those actions. Things like gold, which maybe previously we didn't think of as a very good asset, may become advantaged as a result of central bank action. We thought about some of the tax relief or income supplements and which industries would be able to benefit from that. Fortunately, we did have some companies in the portfolio that would benefit from these policy actions, and we've started to see those recover very nicely as well. Finally, really thinking about long-term trend changes that would result because of the COVID pandemic. We're still asking questions like, will office demand really come back now that people have found that tools of communication are very good in terms of allowing people to work from home? Would that lead to a reduced demand for certain types of office spaces? We remain concerned that in the long run, the unemployment that we've seen, you won't get a full recovery, and there are companies that would be badly affected by the high unemployment.